2024 has already been a wild year in the political space, and it's likely to get even crazier as election season ramps up. And regardless of how you feel about this year's candidates, one thing remains true every single election year: we get the resurgence of doomsday headlines. You've likely already encountered many of these articles. They often have titles like, if candidate A wins the election, the stock market is sure to crash. If candidate B wins the election, say goodbye to your 401k. Sure, everyone knows elections have massive consequences, but what does this election mean for us as investors, and should the winner of the election play a role in the stocks we decide to buy? Let's look at some historical examples to decide. If we look at the average annual stock return from 1946 to 2020, we can see on average, the market returned about 8.3%. That's pretty solid, but it gets interesting if we start breaking this down by government control. Now, the first thing we'll notice, if we look at Democratic president, the average annual return was about 9% versus the Republican about 7.4%. So there is a bit of a difference there, but that's not quite enough information to give us the full picture. If we keep going, look at how much of a difference we see here. Democratic Senate 6.3%, Republican Senate 11.3%. That's a 5% difference. That's pretty massive. Democratic House at 7% and a Republican House 10.7%. Again, Republicans a little bit higher on that one. Democratic Congress 6.7% and Republican Congress at about 8%. But then finally, perhaps what's most interesting, if we have a split Congress, the average annual stock return was about 12.9%, which is really good. Let's take this a step further and look at the growth of a hypothetical $1,000 investment in the S&P 500 index starting in 1933. We can see for about a 20-year stretch we had a Democrat president. And during this time, the market continued to grow. When they switched to Republican, the market continued to grow. Same is true with Democrat, back to Republican, back to Democrat, back to Republican for around a 12-year period. The market saw a lot of growth in the late 90s. And then we have the Bush era, which the market did kind of have a dot-com crash here in the early 2000s, but after that it started to climb again until the real estate crisis. But after that, we can see the market continued to recover, continued to go higher with Trump. And even despite the 22 market crash, where we saw markets decline by about 20%, overall with the current administration, the market has continued to hit new all-time highs. And during this time period, your $1,000 initial investment would have grown to over $10 million. So what can we make of all of this so far? And the reality is that the American economy is strong. Despite who you think good presidents are or bad presidents are, the market has continued to climb higher and higher over the past century. Now, something we see all too often is news and media outlets trying to convince you to buy certain stocks depending who wins the presidency. For example, we used to see things like, if Obama wins, green energy will do really well and oil stocks will crash. And on the opposite side of that, if Trump wins, energy stocks will soar. Meanwhile, we'll see green energy stocks continue to tank. And it's easy to see why that would sound reasonable, but let's see what actually happened during these presidents' terms. We can see for Obama, green energy stock returns were negative 77%, so a lot of people were hurt who listened to those stock pickers trying to pick based on the president. Meanwhile, oil stocks had returns of around 41%. With Trump, green energy stocks were actually up over 300%, while oil stocks were down around 40%. Now, to be fair, Trump did leave office during 2020 when oil stocks were close to the lowest they'd been in quite some time. And then with Biden, we can see green energy stock returns negative 38%, and oil stocks have returned a massive amount, 182%. And again, to be fair, he jumped in when oil stocks were at all-time lows due to the 2020 crash. So here's my simple advice to approaching this upcoming election. Don't let the media scare you out of investing, and don't let the current president dictate which stocks you decide to buy. Again, elections do have massive consequences, and for example, I think taxing unrealized gains would be pretty bad for the economy. But because I'm a long-term investor, I don't have to get caught up in the day-to-day activities of the market, and I don't have to let market volatility scare me. And we do typically see quite a bit more volatility when it is election season. But I'm going to focus on controlling what I can control and focus on the long term. Keep in mind, the media can always find a reason to tell you to sell your stocks. Look at all the craziness we've seen in the market over the past 10 to 15 years. And despite this, the market has continued to climb higher and higher. And the longer your time horizon, the easier it is to make money. Based on data from 1926 to 2015, if you buy a stock and hold it for one day, you have a 54% chance of making money. If you move it up to 1 year, you have a 74% chance of making money. And look at this, if you hold for at least 10 years, you have a 94% chance of positive returns, and once you get to 20 years, it's 100%. So as for me, I'm going to continue to buy quality dividend growth stocks that will help me achieve my long-term goal of one day living off dividend income. If you'd like to be able to track your portfolio with the spreadsheet you see here and also automatically get stock financials straight into your spreadsheet, then you can get a 7-day free trial at tickerdata.com at the link in the description. So with all this being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.